Man, oh man, what a day. Another great day comes to an end. Hope you guys made some money out there. And I will say, the week started off pretty choppy. Right, we had to get over that Fed testimony earlier this week, but a great example of kind of pushing through the choppy stuff early this week. I know a lot of you guys made some money the last couple of days. Some really great trading in our trade room the last couple of days. So very, very well done. But it's back to work tonight. We got some work to do. Tomorrow's a Friday, not just any Friday, end of the week, end of the month, end of the quarter. We got some really, really big news tomorrow morning. And I'll tell you, when you see tonight's charts, tomorrow could be a very, very good Friday for all kinds of trading setups. As always, I have a bunch of trades on my radar for tomorrow. I'm going to cover all my favorite trades in the video tonight. That way you have a game plan to make some money tomorrow. Before we jump in and get this video going tonight, we'll talk about all the trades on my radar. Before we jump in, though, make sure you subscribe to our channel. That way you don't miss tomorrow night's video. And if you enjoyed the video tonight, do me a favor, hit that like button, give me a shout out, give me a holler in the comment section below. Thank you so much for tuning in, sticking around, supporting the YouTube video here tonight. But not for the intro, right? Let's talk about the best trade setting up for Friday. Finally Friday, right? End of the week, end of the month, end of the quarter. Boy, we got some more of those slingshot breakouts setting up right now. Everything's bullish on the S&P, bullish on the Nasdaq, bullish on the crude oil, and boy, on the S&P and the crude oil right now, we've got some great potential. You guys know, if you're with me in the trade room, or if you watch these videos a lot, we've got some ranges and these potential slingshot breakouts on the S&P and the crude oil. So a lot of great breakout trades, deep pullback trades on my radar for tomorrow. And then we have the Nasdaq. Oh, the Nasdaq. The Nasdaq is the big variable for tomorrow, and I'm going to talk about why I say that. The Nasdaq might spoil the party for these slingshot breakouts, but that's okay though. I have a pretty good plan just in case the Nasdaq drags this stuff lower. I've got some great bear traps waiting down here at these lows, and we'll talk about some reversals and head fakes. And I'll tell you, when you see the video tonight, it'll all come together, and we're going to put together a pretty good game plan for you guys to hopefully make some money to finish up the week, the month, and the quarter. Now, I mentioned big news earlier in the video, right? What is that big news for tomorrow? This is going to fly under a lot of people's radar. The personal income and outlay number here tomorrow on the 31st. This has been widely known as the Fed's kind of preferred indicator of inflation. Most people think about CPI and PPI, but this is very well known to be a very big inflation number. So very big catalyst expected tomorrow morning at 8:30 Eastern time. I always keep an eye out for those consumer sentiment numbers at 10 o'clock on Fridays as well. 10 o'clock tends to be one of the best times to trade bond, overall. So that's definitely a time I'll be watching for tomorrow. And, keep in mind, two more things here. Fridays love to run. So one of my kind of goals on a Friday morning is get into trades early. I probably won't be, it probably not good to be getting into new trades in the afternoon, but don't be afraid to leave a little small piece if we start seeing some big moves tomorrow. Sometimes those Friday afternoons, they just keep going and going and going. So in early, try to leave a piece to run on Friday. And again, tomorrow is the end of the week, end of the month, and end of the quarter, kind of a trifecta. And as we've been talking about all week, we do expect there to be an uptick in volatility as we go into the end of the quarter tomorrow. So hopefully that leads to some very explosive moves that we can all trade tomorrow morning. Now back to our charts, because the money, of course, is made on the charts. We know where the catalyst is now for tomorrow. Guys, if you like making money, I would definitely recommend you watch all the way to the end of this video here tonight, because I'm going to go through each one of these charts, and every trade I talk about can be applied to your favorite market. There'll be lots of learning opportunities, so definitely grab some screenshots, shoot me some comments, some questions in the comment section below if you got any questions along the way here. First of all here, we'll go S&P, NASDAQ, and crude oil tonight on the video. These are all tick charts. As we always remind you guys, you can find all the time frames in the upper left-hand corner. This is the 21 EMA on all the charts here tonight. And as always, you can find some higher time frames, some 60-minute charts, some 4-hour charts linked up in the description of the video here tonight. I use those higher time frame charts to give me a sense of the overall momentum direction bias, and I like to use those higher time frames to give me major turning points on the charts as well. So grab those. It'll be a good kind of companion for the chart here tonight. Knowing that, what is the most important factor on the S&P right now? A little bit different, by the way, tonight between the S&P and the Nasdaq. Normally, I would say both of them are the same, but you'll see tonight, very different. The Nasdaq's kind of that big variable. The most important factor right now is it was a nice, strong pop-up into a trading range. Ranges are magnets, and ranges love to rotate. So whenever we see a bull market like this into a range, classic, right? Classic, that deep pullback. The bears get trapped in below the moving average, and all the buyers come in and light their stops up. If you're a student of mine, or if you've taken my free trading classes, you know this, right? This is an easy, what we call a failure into pullback combination, the same stuff, same combination setups we talk about in the free trading course. So the bears get trapped in, right? The buyers are loving that deep pullback because, of course, the last couple of days have been very, very bullish. Well, now the buyers want to finish this rotation. We talk about these rotational moves, right? These what we call slingshots, right? The amount we go below the range is oftentimes the amount we go above the range. And so the buyers kind of have their eyes on this, let's say 4,100, round number up there. Now, clearly the buyers have to make it through this high, but we've got an overall bullish bias on the 60-minute chart. The 4-hour chart appears to want to rotate back into a big range overhead. There's a lot of momentum behind us that will try to push this thing through. And with that said, there definitely will be opportunities if we can get that push through for some breakouts going higher. I've got two real kind of key components or key strategies to trade those breakouts going higher, and we'll talk about that, of course, in more detail in a moment. However, like I mentioned earlier, the Nasdaq, the Nasdaq is the oddball out, and you'll see more about that in a second. The Nasdaq may end up dragging this thing lower, and this is where we lean on that overall directional bias. This is where those 60-minute time frames come in handy. I have to be very careful not to get trapped, right? Not to get fooled like the bears got fooled earlier. I have to be careful not to get fooled down here, and I've got some bear traps, right, as we go lower. Bear traps here, because let's not forget, we've had a very big run really ever since the Fed's testimony was over on Tuesday afternoon. So it wouldn't surprise us to finally get that big correction that everyone was waiting for. Definitely have some chances to buy those deep pullbacks, those kind of corrections. So we'll talk about that a bit later on in the video as well. What should happen right now? What should happen is we should go higher here. So let's talk about that first, and then later on in the lesson tonight, we'll talk about the reversal off the low and the bear traps off the low. The two main components that you want to think about is that as we're going higher, we're looking for those classic, basically trap setups I teach in the free trading course. So as we're going higher, if this thing starts to accelerate here overnight to complete that, or to engage that slingshot, that pendulum swing that we call it, you want to be thinking about bear traps. Basically, you want to be buying as low as you can, and to do that, we want to use traps. So as we're going higher here, I'm thinking about again, trap entries, right? As we go higher. Just like we talk about in the free trading course, there'll probably be a little channel off those highs, right, off of that low. So that's the way you want to be trading this as it's making that run higher. But then what happens is as the market gets a little bit too high up, now buyers don't want to buy high anymore. And now here's the second component. The second component now is you want to start thinking about that deeper pullback. Now, oftentimes with these ranges, and we mentioned this last night, they'll come back and they'll pull back to the highs, right, of those ranges, and that's exactly where you can look for one of these kind of, call it a bear trap. It's basically a seller failure pattern like I teach in the free trading course, right? So as we get that deep pullback, we start running into key areas, right, of support. We then look to get the bears to take the bait, try to sell that. Remember, it's an overall very bullish market right now. So any deep pullback we have to assume is going to be seen as a buying opportunity. I'm not not a big fan of picking bottoms, right, on these deep pullbacks, because sometimes they keep going, right, and they turn into reversals, which we'll talk about in a moment as well, because there's money to make on the short side if it does reverse. But we got to be careful, and we're going to talk more about that in a moment on the NASDAQ here. Don't you worry. But if I get those bears trapped in now, I can then use their stop losses, right? Those stops, and I can look for a pop back up and basically a retest of that high. It's literally what's happening right here, right? Strong run up. The buyers are grabbing those traps. It gets too high up, and they dump it, trap the bears in, and back up to retest the high. So we're looking for almost the exact same scenario as we go higher. Another thing that I want to kind of bring to your attention on this will be a trading range. We have seen a lot of these ranges lately. You know, for example, how they pop up into a trading range. If you've been with me in the trade room this week, we've seen a lot of these what we call directional trading ranges. So just keep in mind, you know, we have that big PCE number tomorrow morning at 8:30 Eastern time. They may pop up here, and we may tread water. You know, they may tread water here until we hear more from the PCE. You know, again, like we saw here today. If that happens now, remember, bull market into a range, ranges act like magnets. All we do is we find support levels, trend lines, we find support levels, prior swings, we wait for those pullbacks. We don't try to pick the bottom, right? We wait for the bears to come in, let them walk into that trap, and then once they short off that moving average, now we've got them right we want them. We know where their pain is, and we can use their pain, ultimately use their stops as fuel for a failure into pullback combination. If you guys take the free trading course, you see literally hundreds of examples, right, of these failure into pullback combos as you go back up to retest the high. So watch out for those directional ranges and then use those failure pullback combos. And again, I know that most of you guys and gals have taken the free classes. You're learning these right now. I love to get those screenshots and those winning trades. Keep them coming. They're very inspiring. But if you're here for the first time today, if you haven't taken the free course yet and learned all the entry tactics and talk about traps, failures, pullback combinations, what I'll do is I'll put a link up here for you in the upper right hand corner. Grab that link, take that free trading course. You're going to love it. The strategy that I teach in that free video series will show you a simple trick to know exactly where the best winners are going to be that day, and I'll make it easy to start making money on your own by teaching my 4 favorite entry patterns. If you hate missing the best trades right now, if you're taking too many losses, definitely grab that link, take that free trading course. It is perfect for somebody trying to make the jump into full-time trading or add another income stream or just get better at trading overall here. So keep that in mind as we go higher here. The next big question, of course, is what if we end up rolling over? You know, what if we end up rolling over? Can we sell it? Where do we buy it? Let's talk more now about the NASDAQ, right? Because as I mentioned earlier, the NASDAQ is kind of the big it's kind of the big variable, right, as we go into tomorrow. Now, why would I say that? Why would I say NASDAQ is the big variable? What's the most important factor right now on the NQ? Well, you can see we had that trading range. It was basically this morning. It was basically just a bull channel right there, right? Beautiful example there of those little trap setups, right? Off the low of that channel. You know, think about this of a pattern we talked about earlier on the S&P, right? If it launches up, right? Think about that pattern right there. Anyways, we're bullish. Obviously, we're bullish, but the range, look at the range. We're right below, well, the range is a little bit lower than on the S&P. And you can see what's happening right now, right? It goes up off the high. Remember, ranges love to rotate. So they go up into the range, they pop up, they rotate down, right? Obviously, right? A little bit less than symmetrical there. And now the buyers are trying to rotate it going higher. Unlike the S&P, they've already completed their pendulum swing. Right, so now their objective has been met, so to speak. Look at the S&P again. Right? Look at the S&P again. Right, the S&P has that again. It has that pendulum here, so it's going to want to punch up, right, and take out that pendulum swing. The NASDAQ doesn't have that. Now, I don't talk a lot about this on the video newsletters. I do talk a lot about this in my morning trade room, and that is the NASDAQ correlation. Oftentimes, oftentimes when the NASDAQ runs into resistance, like it is right now, it can drag the S&P down along with it. It's almost like a proxy, right? Sometimes it creates this kind of synthetic resistance, I might call it, in my trade room. So knowing that the NASDAQ has completed its pendulum swing, clearly has that high of day as resistance here, knowing that we've got that big PCE number tomorrow, and also too, like I mentioned earlier, this is a huge move, right? We've made a really look at that thing, right? It keeps on going and going. So it wouldn't surprise us at all. It shouldn't surprise you at all if we saw some big correction overnight that kind of surprised people and might kind of set things up or tee things up into that big news number tomorrow morning. So I definitely think there's ways to make money going short on the way lower, but here's the scenario that you got to be careful with. We're still an overall bull bias. And, like I said earlier, I like to use those 60-minute time frames to kind of help me filter my decisions. So when I have an overall bull bias, I'm leaning towards the long side trades, right? So, for example, if we do roll over here, there's a new channel coming in right here. So there's a good chance that if bears get caught trying to short this thing prematurely, remember, we're not a mixed market right now. We're not a bear market. We're a bull market. So I really can't get too aggressive selling this. The aggressive buyers, I would say, I have a lot of my students who are a little more aggressive with their trades than I am. If we were to get down around, so this channel come out that low, if we were to get down around that channel low, if we could get some of these bears now to try a couple times here, what I would do, think about this now. We're right at resistance. We probably don't have a lot of buyers who are too eager at buying right here. So if I want to be a buyer here, because I can't lean on more buyers joining me on this trade, right? They call the self-fulfilling prophecy. If I'm not expecting a lot of buyers to be here right now, I need to use the stops of those sellers as the catalyst. I hope that makes sense, right? We don't expect there to be a lot of big money, right? A lot of buyers going to buy there. And so because of that, for example, we expect a lot of buyers buying down here, right? But up here, though, we're not expecting a lot of buyers up there. So I have to use a different catalyst, right? I have to use stops as fuel. Now, stops are one thing, but we have to buy as low as we can, right? We have to buy as low as we can up there because we're buying too high. So you want to see 2 tries and you want to see a failure. If you understand the rationale of this trade, you are in the upper echelon of price action traders, right? Again, we're overall bullish, so I'm leaning on I'm filtering for the long side. I don't want to buy too high, look for traps. I'm anticipating bears coming in trying to short this. I'll let them try a couple times and bam. It's a pretty aggressive trade, right? It's not for the faint of heart. It probably has a 45-50% winning percentage. But I'll tell you, if you're right on this one, though, it can easily be a small risk and a very, very big reward because that breakout target is begging to get hit up there. That's something to watch for if you're more of a risk-tolerant type of trader or if you're pretty confident on the buy side right now. How do we sell off the high? So here's what I would think about for a short off the high. Let's say we were to go up, head fake off the high, and then begin to roll over. That could easily turn into, you know what I mean, right? They head fake off the high and they roll over. Okay, now we've got more momentum on our side. That will probably not get buyers too excited about this. So think about it this way. If they pop up overnight and immediately turn back over and begin to run lower, you know where they want to go at that point, right? They're going to take that low out, right? They want to take that low out, take out some of these areas, attract in more buyers down here. And I would imagine the buyer will probably back off a bit, right? And get in at a lower price from the 13,0100. By the way, this could all definitely set up the same thing on the S&P, right? The S&P isn't identical to this, but this is the same idea on the S&P. If the S&P fake out breakouts higher and crashes back down, most important thing is we don't want to chase it lower. Why? Because we're overall bullish. We have to assume that below all these swings, who's waiting down here? Buyers. Again, if it was a bear market, we wouldn't have to worry about that as much, but it's a bull market right now. So there's no reason why we couldn't fake out, break out, trap low, and still punch right back up, right? So again, this is where that long-term 60-minute bias comes in and kind of makes our job easier. However, if they fake out, break out, they begin rolling over, what's my concern here? My concern is buyers coming in, buyers buying it as it goes lower. How do you avoid selling low? Traps, right? Always traps. And this, of course, is exactly where one of those kind of grind channels comes in, and we look for that short off the high there, right? This is a little more advanced, but if we pop up, a lot of times we do like this. It'll pop up like this. It'll immediately head fake off the high. It'll begin to grind down, right? Grind down like that. And you'll go, okay. Now remember, at this point, momentum is very strong now, right? That rotation off the high, it gives all that momentum. It's going to feel very bearish on the faster time frames as well. All you do is go find a prior swing, anchor there, anchor up here, go out and find some prior swings here, and that's that trap. I would say you need that trap. You need some sort of trap high here because, again, it's an overall bull market, and we could easily have buyers come in, step it in here. Let them sort of buy into it. If you get that nice strong signal off that high, again, it's a classic trap setup, just like you guys are learning in that free trading course that I mentioned earlier. Now, be careful, though, because once we get back down around these lows, this is where you start thinking we're going to get some more buyers coming in. Let's talk about that now. So next step is, and again, remember, all the same stuff goes on if we go higher, right? If we go higher here, I'm looking for those bear traps. As we go higher, looking for that deep pullback, trap the bears in. The same thing I talked about on the S&P applies if we go higher here. If we end up rolling over and taking out this low, what's going to happen is we're still going to be bullish in the overall directional bias, but we're going to be very bearish in the short term. Okay, what you want to think about now is we have to anticipate the sellers are going to, well, they're going to try hard. They're going to try very, very hard to take this thing lower. And this is where the two-try rule comes in handy. We talk a lot about, the mindset of the market. Market participants love to try twice before they give up. So what you want to think about down here is, again, I like the idea of buying low down here because of the big, big move we've seen over the past couple days. What I don't like in this scenario is there's going to be a hell of a lot of bear momentum in the market. It's not going to be easy to pick the bottom of this move. I'm not a big fan of picking bottoms. What I'd rather do is see if these bears struggle here. Let them try twice in this situation. Again, you want to do that because all that momentum as it rolls over. Remember, great location to be a buyer, horrible momentum. Right? We have to make sure we trap those bears in and use their stops. Now, in these situations, these oftentimes will pop with a two-try failure. Lots of examples of that in the free trading course. They'll pop, a lot of times they'll pop up and they'll go right into that rotation, right, back in the opposite direction here. What I can do is find a new channel off that high, mark off that low, and start looking for any of my entry setups off the low of that new channel. Sometimes these things get really, really aggressive, and what they'll do is because all the bears are trapped in there, right? Sometimes they'll squeeze, and when it squeezes up like that and really rips, we don't want to buy too high. We start looking for those bear traps, right? Trap patterns are, you will quickly learn the value of traps because as the market rips and makes these big moves, it's very bullish. Everyone wants to buy, but nobody wants to buy high. And so once it gets below those prior swings, you almost always see a nice, juicy, signal, nice, easy winner right off of those traps. Same idea there, obviously different, smaller scale, but same idea there, right? If it pops up off that low, we now know the market wants to finish off the rotation back higher. Now, a couple of variations of this. Sometimes it'll roll lower, right? Because there's so many bears in the market, they come over, they actually retest that low. Not likely because of the overall bull market, but if they do retest the low, that's even better because now we've got all the, let's call them professional sellers, right? The smarter money is selling low here, right? Selling high, right? They know there's a strong move down like that. They know that anytime we see a strong move, the odds are pretty good they're going to retest that low, right? So they try to short that pop. Okay, once they short that pop, where's their profit going to be taken? Right? Most of the profit now is taken off right at that low, right? So now as all the bears who waited to sell high, as they get out of their positions now, in come the inexperienced traders one of my favorite trades, we call these double bottom reversals, right? The rookies are now getting in. They're piling in. They're the FOMO traders here now, and they're walking right into potentially a buzzsaw. Because again, it's not a bear market. It's an overall bull market. We're now nice and low now. It feels like a reversal in the short term, right? Because of all that momentum off the high. It always feels so bearish, right, on the faster time frames. I remember this feeling when I was a rookie, and all of a sudden, right, you're getting caught selling right into a prior low. Oftentimes, it'll be a little bit below that low, you know what I mean? They try to push on through, the bears try, and they get popped out right back up into that trading range. And again, this may also kind of pop up, and you can find that new channel off that off that high. See how I draw the channels backwards like that, right? Once we pop up like this, you simply go out and find that channel backwards, okay? Like over here, right? Draw the channel at the highs, then bring it down off that low. I'll go back to that in a second here, right? But that creates that new channel. And again, obviously, I can't go over everything right now, but this is where you're thinking about could be a trap entry, could be a failure entry, right? Could be a pullback entry, right? This same idea, right? That same idea of that channel is like this, right? We end up popping up, we grind higher, we find it off the highs, we bring it down to that low, we wait for that nice deep pullback, trap those bears in, and pop it, right, going higher here. And again, I mean, we've seen this hundreds of times in the free trading course. This is, pretty much par for the course, a nice strong move there. So keep an eye on that. The next thing, of course, would be if we do end up rolling over, if the bears hold this, and we end up tanking, right, and rolling lower. That's a little bit more advanced. It's too advanced for this video here tonight. We'll cover more of that next time in the trade room. But that's possible. But again, it's an overall bull market. I'd be very surprised if this thing completely reversed tomorrow. But hey, we have an inflation number tomorrow at 8:30 Eastern time. It's the end of the month, end of the quarter. Nothing really surprises me in these markets anymore. But I will be looking for those bear traps, right, to buy that, right, that trap low back up into that range. So I think that kind of covers all the scenarios. I'm sure there'll be something the market does tomorrow I didn't foresee here tonight, but that of course is always why we have a trade room. We get together every morning and trade this stuff here together. How about some oil? Let's wrap things up tonight on the crude oil. There are three main components on the oil that are playing into this. One is an overall bullish market. Again, that is kind of the filter I'll use. I'm leaning on the buy side. I have to have a very significant situation to want to sell short an overall bull market. It's not impossible. It isn't possible, but it doesn't happen very often. And then, of course, the range. Okay, there's a lot on this chart. Right? There's a lot on this chart right now. I apologize, but I try to keep it as simple as I can. But sometimes there's a lot on this chart. It's a bull range. We mentioned this range last night. If you watched last night's video, it was popped up into a range. We rotate lower. Pretty messy. Oil is suffering from the Ukraine situation right now quite dramatically here. It's a bit of a dog lately. But again, range failures right off the low. And now we're trying to slingshot kind of breakout, slingshot rotation as we go higher. And that definitely puts us potentially here up around that 75.40. Potentially, of course, up around that big bull objective at 76.41. That is the dream scenario, right, for the buyers. Now, the next thing we have is the spike in channel we've been talking about all week. We're still in this kind of spike in channel, this kind of lazy spike in channel, right? Kind of like the Nasdaq and the S&P where we made these big moves up, right? This is basically a spike in channel. It's a classic spike in channel, right? Spike up into a channel, and as I mentioned a few times already this week, we know that spike in channels, at this point, the spike in channel has now been a bit delayed. It's a bit late in the spike in channel. At this point, you'd expect the spike in channel want to pull back into the base of that channel. What I mean by that is where the spike and the channel come together. So it's right in that area right there, about $72, right, a barrel. That is a big variable for tomorrow, and it's definitely something that you want to be aware of. That way you don't get fooled if this market collapses off the high, like we talked about on the E-minis. So far, if we collapse off the high, this is what the buyers are waiting for. They've been waiting in line for this deep pullback, and so we would expect to see some bear traps down there unless something dramatic changes here overnight, right? And then potentially that pop right back up there. So those are the two kind of big components that we have here right now on the chart, a lot of this is very similar to the S&P and the Nasdaq, right? If we end up going higher here and we start to really expand going higher here on the way up, we're looking for traps. Right? We're trying to buy as low as we can buy, looking for traps. We also know, of course, once we get way, way high up, we don't want to buy high anymore. Now we start thinking in terms of, okay, maybe I could find a bigger channel off that high, off of that low. Think about where that prior high is, mark that area up, right? And then we get that deeper pullback. The deeper pullback's what everybody's waiting for now, and hopefully the bears fall for the trap and they get short below the moving average, and they can light those stops up like a dumpster fire. I shouldn't say that. That's a bad joke. But light the stops up, right? And buy into those stops, right? Failure, pullback, strength trade. Let me talk about in the free trading course, right? And again, remember, think about this: pop up into a range. If this rotates, pops, and goes into a trading range up there, it's even easier. Because ranges are basically just a stamp of approval, right? They're magnets. If it goes up and ranges out, I wouldn't say a layup, right? I wouldn't say a layup, right? But it's pretty easy pickings when you see big pops up into trading ranges, because again, you know the direction, you know the range is a magnet. Now it's just a matter of going out and finding support levels. The hardest part is waiting patiently, right? Waiting for that pullback, not letting that pullback fool you into thinking it's a reversal. This is where having a bigger picture game plan. This is why I do these videos. This is why I have these charts, right? Because if you're on a 500 tick chart, a 1 minute chart, that deep pullback will make it seem like, oh my gosh, it's all reverse. No, right? It's just a deep pullback in a bigger picture, right? So now at that point, all the rookies who don't watch my videos, all the rookies who haven't survived long enough to learn these lessons yet, they get trapped in, and we use a classic failure pattern, right, for that pop back up. So those are the three components. We've talked about this already on the NASDAQ and the S&P, well, mostly on the S&P earlier, right? Popping up, possible range, deep pullback. So traps on the way up and deep pullbacks after we get there. Pretty straightforward, right? Pretty straightforward. Again, also too, like I mentioned, the NASDAQ, we're a bull bias, right? So if we do go lower here, I definitely can't short this. Not yet, right? Not yet. I like the idea of the pop up and the rotation back down. If we head fake off the high and then begin rotating, now I could see going in and looking for new channel and a bull trap, right? I could definitely see that. That makes a lot of sense at that point, because now that momentum is turned. Makes sense? The pop up, right, into resistance, now it rolls over and begins to run, grind. Now there's a lot of momentum now, and we're probably looking to take out some of these prior lows, mainly this 72.61 or that 72.19 area, because of that spike in channel pattern that I mentioned earlier. So I like the idea of that short off the high. I just simply don't trust it pulling back right now, because we don't have momentum, right? Momentum is still very bullish in this situation if we pull back right now. Again, this is not my favorite trade in the world, because the risk-reward ratio is out of whack on this. But if you are more aggressive on this, you want to let the bears try twice because of location, and you really want to look for a trap entry, right, to make sure you're buying as low as you go. Again, probably a 50% trade. Right? And again, in a bull market, it makes it worth giving it a shot. In a bear market, I mean, it's almost off limits, right? Because you're buying right into that high. But that's a good example of, don't take the bait there, trying to short off that high right now, because you've got that channel, and we're overall bullish, right? Overall bullish. So give the buyers the benefit of the doubt on that one. That'd be your two-try failure with a trap entry, possibly a crown reversal, right? And then, of course, if we do end up making our way down here, again, great place to be a buyer. Location is great, but momentum isn't very good, right? If we end up all the way back down here, great location, but momentum is not very good. We have to think about now the bears coming in, and they're gonna try hard. Again, with that momentum, there'll be a lot more bears trying to short this thing, dragging this thing lower. So you give them the benefit of the doubt. I still filter based on the bias, right? The bias is still overall bullish. So rather than trying to sell down here, I wait to see if these bears fail, and we use their stops as fuel, right, for that run back higher. Again, it may roll lower. They may retest that low. Same thing. 1, 2, buying back up, right? And again, as always, I try to find, as we're making our run back up to these highs here, I'm trying to find those new channels by drawing them backwards off the high, draw them backwards off the high, pin them down at that low, and look for entries off of the low. It's the same kind of principles I teach over and over again in our trade room and, of course, our free trading classes, right? So, again, filtering that for the long-term bias. And if all hell breaks loose, right? If we dive lower, we hold the pullback on the moving average, and we just rip and run lower. Like I mentioned earlier, it's a little more advanced tactic, but now we'll start looking for bear channels, right? Full reversals, look for that short off the high, and then potentially a double bottom or crown reversal back up again. Sometimes what will happen is you'll get these big monster reversals. It's enough momentum to short the top of that channel, but again, until we really roll over on the 60-minute time frame, right, that double bottom now trapping the rookies there, that becomes a great way to squeeze it back going higher. We'll talk more about that in our next morning trade room session. All right, guys? All right, so game plan is all set to go. I know this was a little bit more technical here tonight, but I think if you watch a lot of these, I think you probably got most of this here tonight. What do you think? I'd love to know your feedback. I'd love to know what your opinion on this stuff is. Give me a shout out in the comment section below. I would love to usually catch up in the comments over the weekend, so I'd love to hear from you down in the comment section below. Also, don't forget, every morning, 8 o'clock Eastern time in the trade room, if you're looking for a great place to come out and learn and trade along, if you're not getting the results that you want out of your trading, I'll put membership links, the description of the video. I'll put free trading course links, the description of the video, and of course all the extra time frames and things like that, they're all linked up in the description as well. The easiest way to get help, if you have any questions about anything we talked about tonight, the easiest way to get help is to call the office or send me an email or jump on live chat. We're here. We're here to help if you guys need help. So don't be afraid to call, write, email, chat with us, whatever your favorite form of communication at this point is. All right, I'm out of here for now. Great job this week. Again, really well done. It wasn't an easy start, but let's finish it up on a good note tomorrow. 8 o'clock Eastern time in the trade room. Be well. Be nice to each other, and I'll see you guys next week on Monday evening. We'll kick off a brand new month of April. My name is Joseph. Get out of here, guys. Adios, amigos. Bye-bye for now.